So, you are the auditor of Tom Pty Limited and Jerry Limited. So I know I've got a private company here. And I know with this being public, they have to have external auditors, company secretary, and audit committee. You recently completed the audit of Tom, issuing an unqualified audit opinion to the MD, Tim T. You are currently busy with the audit of Jerry. While testing trade creditors and purchases, you identified monthly purchases from Tom. So yeah, we've got Tom and we've got Jerry, and we are the auditors of both. You're busy with the audit of Jerry, and while you were testing purchases here, you identified monthly purchases from Tom. So they are buying from Tom. You were not aware that Tom was a supplier to Jerry, and remember that there were no sales to Jerry in Tom's accounting records. So in Tom, they would have had sales to Jerry, but they're not there. However, there were a significant amount of inventory write-offs. So instead of them actually making a sale, showing the reduction of inventory in the form of a sale, they were actually writing inventory off. Further investigation into purchases by Jerry reflect payment into a bank account named Tim T that does not reflect on Tom's financials. So on top of it, Jerry was paying for these purchases. They made a payment to Tim T, not to Tom Company. And what we've seen here is Tim T was the MD of Tom. So what it looks like is happening here is Tom is writing off inventory, but in fact actually selling it to Jerry, and Tom's MD is taking the cash for it because the money is still coming, but just not into Tom. So ultimately what's happening is that in Tom, they've got misstatements in terms of inventory write-off. They've got misstatements in terms of reduced revenue, because they actually should be recording revenue that's not being recorded. And they've got misstatements in their bank, because it actually is also reduced. It should be higher because they should be getting the money in. Who is doing all of this? Their MD, their managing director. So what is happening as a result here? The MD's bank is going up. So we've got here theft of cash and fraudulent reporting in Tom by Tim T. So you're required to discuss the steps you should follow after reading the information above for 10 marks. So what do we have, guys? Your automatic answer to me is we have a reportable irregularity, and so you say to me, now what needs to happen? We have to discuss the steps, so the steps are then going to be all about our duty to report. Right? And you're going to start your answer with, this is a reportable irregularity, therefore we need to send a report to IRBA. But what have you done? You have concluded in your head that it is a reportable irregularity because it's very obvious to you, but you haven't told the marker how you made that conclusion. And so as a result, you are only going to get the marks for the steps to report and not get the 10 marks which are actually available. So remember, I keep reminding you of this. Whenever you're making a conclusion in your head, put your thought process and the steps you went through down on paper and make that conclusion on paper, because that's where marks are going to be achieved. So your first step here, guys, is going to first prove that there is a reportable irregularity, and then step 2 is to discuss your duty to report. So to prove it, you're going to say there was an unlawful act What are they doing? They are not recording revenue and bank, so non-compliance with IFRS. Two, I then need to say by management, and I need to say it's done by the MD, Tim T. 3, I need to say, is it a or causing material financial loss? And then I can say yes, it is, because who is being affected here? The company is not getting their bank and profit tax, or SARS is not getting the tax on the revenue. Is it fraud or theft? And you can prove both. So I'll say theft of the cash, of the bank amount. And then, is it a breach of fiduciary duty? Yes. So not in the best interest of the company. It's in the best interest of Tim T, the managing director. So then I can say this is a reportable irregularity. Then I can also add my point that says they cannot give an unqualified opinion. And then I'll go through my steps of section 45. Immediately send a report to IRBA. Within 3 days, provide management with a copy of a report. And within 30 days, allow management to provide or make representations, and then send a report back to IRBA about whether it's continuing, never actually happened, or it has ceased to continue. Okay, don't forget this, guys. Your immediate response is to prove this in your head. You need to prove it on paper. Okay, the solution. You can see how we first prove that there is this reportable irregularity. There's that unlawful omission of revenue, or you could prove unlawful act in terms of non-compliance with IFRS, so on, done by management, committed by Tim T. It's going to cause losses to who? It's fraud or theft. It's theft of cash or fraudulent financial reporting, and it's a breach of fiduciary duty. Okay, I've just noted here that section 45 says you must consider using all sources. Therefore, it's fine that I've only picked this up through the audit of another company. I would also add here, you cannot provide an unqualified opinion for 1 more mark. And then I go through my steps in reporting. Okay, and then I'm maximizing 10 marks.